Okay, fine. So, hi everybody. I know that some of you have heard me speak at one of these events before, so I'm not going to talk about the background so much. I'm going to talk about our opportunity and hopefully generate enough questions to fill up some question time at the end, and of which I'm aiming to give you plenty of time. Integrated circuit is a custom chip designed for a specific purpose. ASICs are used in a wide range of applications and are invaluable components of modern electronic devices. And thank you for the plug from the previous speaker, that was very helpful, introducing how important semiconductors are. They will continue to play a vital role in both the green transition and the adoption of edge AI, and we're going to talk about that quite a bit this evening. Applications are well known. Automotive clearly is a growing area for us. Connectivity in low Earth orbit satellites is important to us. Smart healthcare, networking, 5G, consumer devices. As the previous speaker said, we've got chips everywhere. The reason why people want a chip is because we can differentiate a product for a customer with new functionality, lower power consumption, small form factor, lower cost in large volumes, etc., etc. So there are expanding markets for ASICs, vehicle electrification, enhanced safety features for cars, edge AI impact, which I will talk about in a short while. In the industrial space, there's enhanced cybersecurity needs. There again is an edge AI impact, and an improvement in intelligence and working with AI is also a key need for industry. In the space and communications area, there is a merging of the terrestrial and non-terrestrial networks. We have a leading market position in advanced comms for ASICs. The merger of the ground-based network and the satellite network is forecast to grow by 38.2% over the next 5 years. And I'll talk about how EnSilica got into that in a while. In healthcare, just aging population gives so many opportunities for ASICs. So the key technology drivers for ASICs are AI at the edge. AI at the edge needs mixed signal RF to be able to interface to the real world. It needs low power and it needs a high density of digital designs. The second area of technology drive is from enhanced cybersecurity. You will have seen that there is legislation now in both Europe and the United States that requires companies to protect their electronic systems from attack from cybersecurity challenges. And the other key technology driver is our IP library. Our IP library reduces the time to market and then enhances our competitive position. It includes radar, RF, which is radio frequency, beamforming, cryptography, and mixed signal sensing and control. Just briefly about where we are with our strategic positioning. We are a well-established company. We've been around for 24 years. We've got 170 employees worldwide. We're based in 3 major areas. One's in UK, in Oxford. We've got a place in Brazil, and we've got a place in India. We also have small offices in Germany and the United States. We're focused on 4 high-growth opportunities: satellite communications, the industrial sector, automotive and healthcare, and our position in all those markets is underpinned by a strong IP portfolio, which I'm going to go through in a short while. We have a strong pipeline and we have a strong order book of projects with potential value of $510 million, although you will have seen we've announced a couple of contracts in the last 2 days, so that's now $450 million, but that's because we converted some of that into proven business. The fabless model, which is what we are, is a proven business model that scales and delivers returns. And just that there's no results in this presentation, so just to say that we're delivering on plan. We had a good financial year 2024, which we announced results pre-close in May, and we're in line for 2025. It's important to us to talk a little bit about our people and our culture. We've got 170 people. A high proportion of them are graduates or second degree level and even PhDs. And this is one of our biggest challenges, is being able to attract the right staff around the world to be able to meet the challenges that our customers give us. For all our employees, there's a high level of equity participation. It's important for us that they feel that they're involved in the business, and every single employee has some measure of equity participation. We have some challenges in keeping staff, and so we do that, and we've got a good record of doing that. We do that by creating an environment which the employee wants to work in, and in particular, we give them interesting work. But we still have some challenges to meet. We're not very good because it's very difficult to find female engineers, so we're supporting all programs that we can to attract more engineers into STEM schools program, etc. We support the Apprentice Scheme Engineering Trust, and we're always looking for qualified engineers who are looking for interesting assignments. This is where I want to make it a little bit different. So what differentiates us? Well, someone said on one of the bulletin boards, really, we can't be much of a tech company because we've got no patents. The reason we've got no patents is because our IP is very easily hidden in a silicon chip. If you think about trying to reverse engineer the design of a silicon chip from the chip itself, you'll take a very long time to do it. So we have a limited number of patents, but we have a huge history of developed IP in cryptography, in radar, in analog mixed signal and radio frequency. Those are all important elements that support the business. And we've got 23 years of know-how and building our knowledge and the associated IP. One of the things people don't really realize about EnSilica is that we have scarcity value. There are not a lot of companies that do what we do. It's typical for a company making analog ASICs to become specialist in a particular area. For example, there is a company in Swindon that has a great reputation for making tire sensor chips. So when we get a request to make a tire sensor chip, we don't even bother to quote because we know they'll do it better. And similarly, we have areas of expertise where people would not pitch against us. So it's quite a small group of companies that we are, and there's a lot of scarcity value to our business. And what we do is not easy. We pride ourselves on doing things that are difficult to do. That means the competition is less, and hopefully over time the margins will be better. We've been challenged about whether we can handle smaller technologies like 7 nanometers and 4 nanometers. In actual fact, for the sort of work we do, which needs to collect analog information at the edge and convert it into digital information for the central computer, most of those chips are at a much larger size, somewhere around 120 nanometers. But we are able to do the smaller technology. The smallest that we have done is 7 nanometers, and we could easily do that again. It's important to know that AI at the edge needs mixed signal and RF technologies to be able to interface to the real world. They need lower power and they need higher density digital designs. We are good at these things. And I just wanted to, there's a quote here that I wrote, that the CEO put on a RNS reel recently. As the demand for higher data rates and the push for more power efficient systems increases at pace, ASICs are becoming essential for the next generation of terrestrial and satellite telecommunications equipment. Our ability to both develop and deliver highly complex solutions continues to drive some of the world's leading equipment manufacturers to adopt EnSilica's ASICs, making us an ideal partner for choice. We recently announced that we had devised and sold some cryptographic IP, which was designed to protect challenges from quantum computers. We sold this IP to a number of other chip companies around the world, and we think this will be an integral part of our IP over the coming years. I'm not going to read out this whole slide because it takes too long, but it'll be in the deck that you get after the presentation. To scale a fabless semiconductor business, a strong IP portfolio is required. We develop our IP to make our offering to potential customers more competitive. because we can get higher gross margins on the supply revenue element due to the lower cost of the development of the ASIC. As I've said already, our IP is focused on cryptography, communications, mmWave, radar, analog sensing and control. We do sell our IP to other chip makers, but not to competitors, whether they are real or perceived. And by developing and reusing our IP within our focused business units, we aim to make ourselves a go-to provider for key application areas within our target market. Here are the sizes of the markets that we're trying to address. The automotive market is forecast to increase to 150 billion over the next 7 years, a compound growth rate of 21 to 30%. The industrial market is forecast to grow by 9% to 130 billion in the next 7 years. The health sector is forecast to grow to 7 billion in the next 5 years. And what more interestingly for us is that in SATCOMs, there's now data that we've found that shows they're forecasting the increase in the SATCOMs market in the next few years by 38.2% to 16.1 billion. This is becoming an increasingly more important sector for us. You may have seen in one of our RNSs yesterday that we highlighted that we had been working with a company called AST in the United States. We announced this fact 18 months ago. We actually started working with them before IPO. That business is now maturing. If you've done any research on AST, you'll see that that business is growing quite dramatically at the present time. They're just about to launch their satellites. Next year, they will launch even more satellites. And EnSilica have been working with that company on developing the chips that they have in their satellites. And some of the chips are fundamental to the success. In the industrials market, you will have seen an announcement today about a chip that we won for the design of just after IPO in July 2022. It's taken about 1.5 years to design the chip, and we announced in October 23 that we had taped out the chip. We've spent the last 9-10 months testing the chip, and I'm pleased to tell you that the customer has now placed an order with us for the supply of that chip, which will last for about the next 6 or 7 years, and it will be worth probably about $30 million. There are other examples there which I'm not going to spend too much time on. In the automotive market, we have one chip in supply already, and we've announced recently that the revenues from that chip will increase to $40 million over the life of the chip. That's already in supply, and we expect to have further demand from that customer for the chips over the next few years. The healthcare sector, we have our own IP that we developed during COVID, which we are seeking to partner up with a customer. We have a lead customer identified, and we hope in the next 6 months to be going forward with those people, at which point we will commit some capital to do a tape out ourselves of the chip, which we haven't done yet, simply because we didn't want to commit the capital before we got a lead customer. This gives you an idea of how our revenues grow. So as we win a new contract, at first we have the design revenues, which is the light blue part of each graph. And then we have, once we've designed it, we tape out, and then you have tape out revenues, which is the grey part. And then you have this recurring, annualized recurring revenue from supply of the chip. And you can see that over time that just builds and builds and builds. We now have 4 chips in supply and a further 8 chips in design at some stage or another. And this slide tries to demonstrate how we're building our annualized revenue, regular revenues, which will drive the growth of the company, and also drive the growth in its cash flows. So our investment case is, we think given the difficulties that we entered the market in 2022 when Ukraine had just been invaded, we think we delivered a reasonably solid financial and operational growth since IPO. We are successfully delivering to a SATCOMs company, an automotive company, and an industrial company, and we've got more to come. We've got a very strong pipeline of opportunities. Fabless ASIC supply model is a proven model. We've got our own IP to support us in our scaling, delivering growth, as I've just said, and we think we're in a very good opportunity for the investment. So what I really want to do now is take your questions, which I know there's a fair few.
First question's about the announcement of the new production order. What is the impact of this on the business? Does it have any impact on the wider market and other companies choosing EnSilica? Does it have any knock-on effect?
So you're talking about the announcement today?
Yeah, that's right, Mark.
Yeah. So the impact is, it's first of all, it's the first time a order that we've won since IPO has gone through the whole process from design through to supply. So it's validation of that the model works, even though we've got other chips going into supply beforehand because we've won those before IPO. So it's a validation of the model. It also starts to show payback on the investment we've made in the design of the chip over the years. We put about £4 million a year over various designs each year, and this will now start to repay itself, and it will improve the cash flows. And we've said, and I know people have referred to this, that in the early part of 2025 we expect to become cash generative and be able to fund our own development, and this chip going into supply is fundamental to being able to do that from about the second quarter of 2025.
A few people asking about that, Mark, so good to get that covered off. Next question is about a future order book. It says, you said the potential order book is about $450 million after the latest contract announcements. Will that future order book be topped up? Can you comment on the likelihood of that?
I'd be surprised if it wasn't topped up within the next 6 weeks. The market at the moment for us is very strong. We've got a lot of opportunities. Our biggest challenge at the moment is deciding which ones not to do, not the ones to do. And they cover right across all of our chosen market areas. So we are confident that our pipeline will remain as it has been for the last 2 years at around $500 to $600 million.
Could you comment on why you might not take up an opportunity, Mark? Is it just financials or are there other considerations?
Capacity, really. We want to choose the contracts that are going to generate the most return for the company, and sometimes one contract might take up more engineers than we want to assign to it, and if we've got an alternative, then we might choose otherwise. At the moment, we have enough engineers to deliver on our plan for 2025, current year. But if we won a couple of big orders, we might have to make some difficult decisions, and that's why we're constantly looking for teams of engineers. And there are plenty of avenues for us to explore.
Could you get more engineers by acquiring? Is it possible to pick up some smaller businesses or to make some strategic acquisitions to get the staff?
So I'm mindful that a number of people have told us that you don't want to take your eye off the ball just after IPO. So we haven't really looked at opportunities for acquisition since IPO, but yes, they do exist. I also know that the valuations of those companies in the past has been ridiculously high, even given the very high valuations for these companies. And there is evidence that there's more sensible pricing of those assets today than 18 months ago. So we wouldn't rule it out, but we've got no plans at the present time to buy anything. We've got a very full table of opportunities to deal with, and that's our most important criteria, is to deliver the numbers for 2025, become cash positive, and de-risk the investment.
Questions asked about the sales process. Do you have a team of people going out and knocking on potential customers' doors, figuratively speaking, or the conversations start with potential customers coming to you to start a negotiation or a dialogue about how you can service their need?
It's more the latter. As I mentioned just before, you tend to get a reputation for the things you can and can't do. And so people tend to approach us. So we do have sales force, and we do have sales reps, and we do attend industrial shows and what have you, trade shows. And we do get inquiries at those trade shows. And we do knock on doors as well. But by far and away, the biggest source of new work is people saying, "We've heard you do this. Can we talk to you, please?" And that tops up our pipeline all the time.
Question next about the shareholder register. How much do management own, and do you have any institutions owning the company?
So first of all, Ian, the CEO, owns 17%, and a bunch of employees. Total, we probably own about 35%, 37%, something around there, employees. Then we've got some big institutions, not as many as we'd like. Amati VCT is our largest institutional investor. They came into IPO. We have other institutions as well, Herald Investment Trust, you'll have heard of, I'm sure. We also were fortunate enough to be identified by a US-based institution who came in at the last fundraising. We were delighted to get them on board because they came out of the blue. They'd been screening a whole host of businesses and decided they were interested in EnSilica. And we hope to get more US-based investors as well. Miton are an investor, the usual culprits for the AIM market, but we do struggle to get the bigger institutions online, and that's because our market cap is not big enough. Most of the institutions we would like to have on side have a cut-off at 100 million market cap, and our market cap is 45 million, I think, at the moment. So we'd like more institutions. We do have a plan to improve that. One of the key parts of the plan to improve our institutional representation is to do our numbers, and if we do our numbers for this year, the cash will be good. You can check out what the market expectations are if you go to Allenby Capital's site. There's a link on our website. If we do our numbers, we get the cash sorted out, we hope we'll get a re-rating. There was a guy on the bulletin board today who's done a great bit of maths. If you want to go there, it's interesting. At that point, a lot of things will open up for us, but the important thing to do is not to fail in delivering our numbers, and that's what we focus on, and that's what we are doing.
A very strong message, Mark. Thank you very much indeed. I think we're done on time there, so thank you very much for joining us this evening.